welcome, Rich. Welcome, Hart. Looking forward to the conversation. Rich, you say you're one of the oldest trading platforms, and you gotta talk about that a little bit more. And then Hart, I'm looking forward to hearing a little bit about how your backend or technology sort of works in helping all the blockchain companies that exist. Interestingly enough, I was hoping that you would have been there. I'm sure you were there for a bit of the conversation that Carla had of Cambiadas, and I know you're with the Pledge Fund, and talk about helping communities and how they can grow. I mean, touch on that a little bit, because we are looking at 2020, which has been dramatic and horrendous for a lot of people, and then some observations in that area, some learnings and some perspectives into what we should be doing or looking at in 2021 would be interesting, and how we should be facing the upcoming year. So Rich, I'm going to leave it up to you. I'm going to drop out. We are running a little bit short on time, but I think we'll cover a lot in the next few minutes.
Thanks a lot. Hey, Hart, give you a little background on the two of us. Hart and I went to college together 20 years ago. He studied computer science, I studied math, and we had a little bit of discussions back then about what we were going to do with our lives, what we're going to do with our careers. And we both spent a decade at Goldman Sachs, and tackling problems from the other side of a football field-sized trading floor. And then a few years ago, found ourselves in a new landscape, and there's some similarities, some differences. So when asked who to have this panel with to talk about the future of finance, Hart was one of the first people I thought of. Luckily, he said yes. And I got into the space 2013, a year after buying my first Bitcoin. It was somewhat opportunistic in that I was still working at Goldman, and this is a project that I joined with another couple of Goldman alums to start what we thought was the first fully crypto native institutional market maker. So at that point in time, it was all programmatic trading, and it's a bit of the opposite of what happened in traditional finance, where you'd have a floor where you'd speak to people in person to do trades. And then eventually you go to do programmatic trading online. It's more anonymous. Crypto, it started off the opposite way, where it was all programmatic, but then 5 years in, we found ourselves filling the void in derivatives and doing more OTC transactions and options and structured products. And the whole way through, it felt that what we were working on, mostly bridging new products from traditional finance into crypto, was pretty novel. Then 3 years ago, when Hart came onto the scene and discussing what he's working on, he's pretty much the first person I've heard about what DeFi is, and his explanation seemed pretty out there, like what maybe could come into play in 10 years. And I thought it was interesting. Then finally, in this past year, I'm seeing Hart's name come up all the time, and I think we've all heard of yield farming and the incentive structures that have led the way to make DeFi a really exciting theme of the year. But I think more than anyone I've spoken to about the topic, Hart has some pioneering ideas about real use cases for the future. So I guess first question I'll leave to Hart is what do you see are real use cases for crypto today, and how do you think that's going to change 10 years out, say 2030? What do you think we'll be using cryptocurrency and these themes for?
Yeah, well, Rich, thanks for that, man. And Kareem, thanks for having me. And again, I think it's been cool to, work with Rich for 20 years since college, and then a decade at Goldman, and find ourselves in the same space. And it is like the best part about this crypto ecosystem is that you get to hang out with some pretty interesting people, talk about interesting problems. And so, yeah, Rich, so what do I think the use case is for crypto? I think there's a big financial component here, not just about moving money like Bitcoin did, but about building a global internet native method or protocol for doing finance, for transferring risk. And really the most recent way I've been framing it is an alternative way of enforcing financial contracts. And so, you and I have talked about this a bit, but if we look back at the history of finance, the invention of the financial contract was sort of a big deal. It's the thing that led to, and I'm talking about a legal contract. It's the thing that led to futures to exist on futures exchanges. the entire derivatives market, options, like everything that you grew up doing is all insurance, is all premised on us having a credible way of writing a financial contract between individuals that can be enforced. And the way the traditional mechanism works, which has worked great, is that it's premised on this concept of legal identity and legal recourse. So I know who you are and I can sue you if anything goes wrong. That's how these contracts have been enforced. And what we're kind of working on at a more abstract level is creating, and what DeFi is really doing, is creating an alternative method of enforcing a financial contract. One that sidesteps those limitations, that sidesteps the limitation of needing to know who somebody is and having them need to have a legal representation within a certain legal jurisdiction. Instead, we're creating this alternative way of enforcing these financial contracts using nothing but economic incentives, and one that is, like, by definition, global in nature. And to me, that becomes a really powerful use case where we can take some of the limitations that the language of financial contracting currently, like as written in legal structures, has, and remove them and build like a truly global financial system, which is kind of a wild big picture idea.
Yeah, I would stop for a moment and see if anyone, for now has one question to ask about what you mentioned, since I think a lot of the stuff when you mentioned it 3 years ago went over my head. So if there's anyone who has a brief question or clarification, we'll give a moment for that first.
I'll watch the chat and see if anybody like pops in.
Perfect.
But yeah, Rich, to keep going, I mean, like, you look at how, like, take your business. So GSR is like a leader in writing derivatives across the space. But in order for you to enforce those derivatives, you need to know who the other side of your trade is. They need to, you need to verify their credit. You got to be able to basically sue them. And that limits your market in a big way, right? You can't provide your services to a whole bunch of people because you're limited, or you're unable to actually validate who they are. So you, like, big picture, look at this DeFi thing and look at what they're trying to do. What these DeFi contracts are trying to enable is like, hey, Rich, what if you could enforce your derivative contracts in an alternative means that doesn't require you needing to know who these people are and how to sue them. Instead, it's enforced with economic incentives alone. And, for your market, you could argue that, hey, okay, that would let GSRs serve just write options or derivative contracts to a few more people. But if you start to sort of zoom out, you could be like, well, hey, there's actually a lot of people in a lot of parts of the world that don't have access to basic financial services, to basic forms of investment, or to like basic types of insurance. And there's a hell of a lot that we could do if we could access them. And my other favorite example to kind of point to here is you look at, you pick your favorite fintech business today that's supposed to be an internet business. You take like Robinhood in the US, or Wealthfront or Betterment also in the US, or any of these like neo banks in Europe. And these are supposed to be internet-based businesses, but they can only serve like US customers, US people. They're definitionally like not global in nature. And I find that kind of like a wild idea, that we have these like internet-based businesses, but they don't actually serve the internet. They just serve a specific legal jurisdiction. And it's, again, a function of the way they're all enforced or informed is rooted in this kind of antiquated like legal system, which can't serve people in different parts of the world.
Yeah, I think it's a good point. I was actually thinking about the UMA above your name, universal market access. That's a theme to bank the unbanked, and there's a lot of humanitarian concerns that crypto, I think, could help in the future. It's been a bit more about speculation and work on an investment for its first decade of existence. But I think that as opposed to that focus on that one problem of bringing banking to the unbanked, also just bringing market access is important. There's investments that if you don't have over $1 million, if you're not an accredited investor, if you're not in a circle, the old boys club, to see certain investments, you won't see them. But I think having this ability to market and structure unique or plain old vanilla assets for individuals or corporations without having to go to a professional investment bank to serve them up for you, I think that's very valuable. In the same way, GSR, it's not in our 3-letter name, but it's one of our slogans is that we're trying to reduce the friction between capital and innovation. So the work we do to bring the market to the founders is that we're helping reduce the friction. Otherwise, they would need to go market their investments and their ideas through an investment bank or in a private circle. But by using the token economy, they're getting a bit more direct access. So even though what we're doing is a little bit tangential, I think there's some overlaps in the goal. What about it sounds like from most of our conversations, Hart, your focus is on bringing access to investments that are very much abstract in nature, synthetic investments, and taking something that it's purely available like online, even if it's not on chain. Do you have some ideas where what you're doing could be helpful for real assets, whether it's a property or something that's more in nature?
Yeah, maybe I have a little bit of a contrarian opinion here to a lot of like crypto people, but I think that if you think of, if you use this lens of thinking of smart contracts as a contracting language that can be enforced on chain, and a contracting language that can be very useful in determining payouts of money going to different counterparties. It works better when you limit it to a sort of financial contract, to just a virtual thing where I'm just sending money, I'm sending cash around according to various outcomes. And that's why what we focused on, what we're kind of known for, is this concept of creating synthetic assets. So synthetic tokens or virtual representations of things on chain. When you start trying to enforce the real world, which has like physical things like property or whatever else, at some point in the design, you need the linkage back to the real world. You need to actually go back to like legal recourse to say, okay, this piece of property, who owns it? And how do we enforce that they actually get to keep that? And so I'm kind of the opinion that crypto can be useful in sort of building better tracking mechanisms, but you can't escape the old world when you're trying to enforce actions with like real physical property, if that makes sense.
Mm-hmm. How about with the staking mechanism where you have people in the real world vote, and when they vote alongside one another, the majority of them could make a determination which enough people in the system would assume is the truth, where the crowd's vote ends up the truth. Do you feel like some of those mechanisms, even though they were created for something like the end price of Ethereum at the end of the year, do you think those could be used? I guess it would need to be a big enough concept that people in the real world could view it. Otherwise, it would be unfair for a global set of stakers to look at the valuation of one property.
Yeah, this is the crazy stuff that we get to do in crypto, is like design new incentive structures. So I look at it as like, I think a lot of crypto is like this amazing playground for economists and economist-like people to test ideas, where, hey, could we build a kind of a new form of like a court system or an arbitration system to validate what the truth is, to actually decide what the truth is, and can we actually model that with math? And I think that's a pretty powerful concept. So, and in some extent, that's what we do with our existing design, where we have what's effectively a game, this game theory thing, where we have it's almost like a human court, a court of voters that will decide on the outcome of different financial payouts or financial contracts, and that we can extend in different use cases. So yeah, I think, Rich, that's the part that gets like really exciting as you go way far out to like the future of finance here, back to the title of our presentation. It's like, people are going to invent, there's this new medium to experiment with incentive structures that are routed in economic incentives. And people are going to invent new things. That's actually, I think, probably the most exciting part. New things or new ways that really have no analogy to the existing or the traditional financial world of financial products or services or concepts. Yeah.
How about as far as making future predictions? The Bitcoin dominance has been in the 60s. Where do you think that dominance is going to be 10 years out? Part two of the question, right now, if we have global financial assets roughly 200 trillion, let's say 10 years out, that's into the three quadrillion. What percent of that do you think will be crypto related assets by that point 10 years from now?
Yeah, I'm gonna turn around and ask you this too, because like you're a trader too, and I'm sure many views on this. But I think the things we've talked about before. Well, first of all, on Bitcoin dominance, Bitcoin dominance is, I think, an interesting metric, and I do think that Bitcoin is an important like cornerstone of this new financial system, but it's not the only one. And so I think crypto as a whole will grow. I think Bitcoin will forever have a very important point in it. But I sort of like all these concepts of like central bank digital currency and all these other things. I just feel like there's going to be more and more things that do make the thesis of Bitcoin being like the virtual gold hold true. It'll be a smaller point of this. And actually, spoiler alert, there's a team that's building a very cool synthetic token to actually let you on our infrastructure to actually let people bet on the Bitcoin dominance or altcoin dominance ratio. So you can actually express a trading view on whether you think Bitcoin dominance is going up or down. But before I put back the question on you and asking you how big you think crypto is growing, the only point I look at is that this DeFi thing, it has legs. Like this last year has sort of proven that this DeFi thing it is real and is useful and accomplishes like a real use case. And if you expand out the two trends that I think are obvious of the last 30 to 50 years, it's that tech is eating everything, technology is eating everything, and also finance is eating everything. So when I look at like kind of crypto and DeFi, it's like this mega trend of these two secular things that have happened coming together, and I can't help but imagine it's going to grow considerably in the next 10 years. But like, let me push back to you. Where do you think this is going?
Yeah, I'd say that over the past decade, being immersed in the space for a good chunk of it, I've been asked the question, when was that aha moment where I thought it's really going to be something big, something much bigger, the potential to disrupt other areas. It's really in this past 6 months. I think DeFi has helped plant that seed. In terms of the relative growth of both sides, I think that we're first going to see a much bigger spike in the Bitcoin side of things, and part of that's from having these direct sit downs with some of the biggest investors in the world. And I think that one of the first things I've learned from having those conversations is that Bitcoin is not big enough to even be investable yet to some of the biggest financial players in the world. If you want to be able to enter a position, yeah, you can enter it slowly without having that much impact, but often there's mandates that you need to also be able to exit quickly without smashing the market. And you see what happened in March. I don't know if that took more than a couple $100 million worth of Bitcoin selling to knock the price down 40%. So if you're navigating a cruise ship, while you could put on a position as big as a billion, I think that it would be a difficult position to exit out smoothly. So I think that the fact that Bitcoin is by far and away the biggest, and it's still just getting to that point where it's investable, I think that we're going to start to see a spike in the proportion that's Bitcoin versus other, once that trend is not only a early mover, everyone starts to invest, and large endowments, other groups can do more than dip their toes in. I think we'll see Bitcoin go leaps and bounds over the other group. But I'd say looking 5+ years out, What is Bitcoin? Bitcoin, if it's more of a digital gold, okay, yeah, you can see gold right now at the 10 trillion marker going up into the multiple tens of trillions because it has inflation protected qualities. So maybe Bitcoin, it's a more technologically savvy wrapper. If we're really using it and it's not, catching up to gold, maybe it's going to get to be multiples of gold, 5 years out. But I think that it might be a bit stretched to go further from there versus if we have other systems and ways of interacting, like you said, we're reducing the cost to innovate, and you could reduce the global boundaries and the ways you innovate. I think we're going to see a lot more winners out there that might still be in high school now or earlier are going to be the biggest names, 5 years from now. So I think going out of a full 10 years, if crypto was going to be into the hundreds of trillions, by that point, I think that you'd start to see a drop in Bitcoin, since you can get creative, but I think you'll never get to the level of creativity as we're seeing already in DeFi space. And Bitcoin itself is DeFi. It's just been a really slow dozen-year uptake to transfer existing value, over the internet at in a decentralized manner. But DeFi has been, new bites to the apple. You're trading in the same decentralized mechanism. You're borrowing, lending, and I think that we view, DeFi, decentralized. I think in a few years we're going to start talking more about this decentralized everything. There's ways to do, gaming, sports betting, anything you could do online. I think we're going to see that being stuck in one jurisdiction, being stuck with one company dominating it, whether it's chat, doesn't matter what it is. I think we're going to start to see the benefits of having it be decentralized and have it be the group and the community is determining the governance and not a government or individual body of people.
Yeah, Rich, it's wild, right? Because you look at DeFi right now, and it's so early still. It's so early days, and it's feels like there's so much dumb stuff happening, and some crazy valuations, and there's still just it just feels so new. And I think the thing that I have to catch myself by is this is such a massive market that it can be early and still be a big deal. And if you're beginning to believe, I agree with you entirely that if we're believing that this DeFi thing is going to happen and it's going to have legs, the winners in it are just too hard to pick right now. And there's going to be a bunch of people that are still in high school that are going to make some big changes.
So this is getting really interesting, and it's getting actually global and macro. Did you want to take maybe a question or two from the audience, and then, or should I just read it out for you? Yeah.
Happy to.
Yes.
Steve's up there. So Steve, do you want to ask your question? And then if we have Solomon over after that. We're coming to time, so just a brief response at this point.
Yeah, so my question is, hi everybody.
Hi, Steve.
My question is quite theoretical maybe, but looking at contracts, if you remove the way that somebody can be sued because you did not respect the contract, and you just replace that by pure economic sanctions, for example, because there wouldn't be any other types of sanctions. So this maybe could be disregarded by the economically richer parties. And also on the other way around, incentives would work stronger. They would have a stronger effect on the economically weaker parties. How do you see this?
I'll let Hart
I
go
think
first,
I get
but I
your
have some
question.
other thoughts too.
Yeah, Steve, I think I get your question, and this is the exact type of game theory that I live and breathe for. And this is exactly what we're solving. The way I'd look at it, without going too deep in the weeds at a really high level, is that in crypto you can move money really quickly, a lot faster than you can wire money in the old world. So as long as we can design a system where it's always in your economic best interest to add money or to do the action, or you'll lose a penalty, then as long as we can get that game theory correct, I can design a system where it's worth you doing what you're supposed to do. Otherwise, you get penalized, and that penalty could go to, say, me if I'm on the other side of your contract, to compensate me for you not doing what you're supposed to do. So, like, from a pure nerdy finance perspective, you can imagine a world of like almost continuous real-time margining of your contract, or an approximation to it, where you've always created an economic incentive at every moment in time. There's an economic incentive for you, Steve, to do what you've promised to do. Otherwise, you'll get hurt.
Mm-hmm. Okay.
I'd volunteer also, parking and parking tickets is an example where people are less happy to live in a world where it's the fancy cars are getting all the parking tickets and abusing the spaces and, common space. And so that's a system where if it was only about paying for the parking ticket, then the financial incentives might not be the best for the community. But there's often ways where it doesn't have to be a social credit, could just be you break the parking rule too many times, you lose your license. So there might be something to be said about abusing a system. You lose privileges or you hurt your credit score.
Okay, yeah, fair enough. I understand.
We have time for one more, Karim?
Thank you. Very,
Yes.
very brief, though. If Solomon's there, very brief,
Yes.
because the rest of the panelists here for the next one.
Thank you. Does MMT or more money printing, does it increase or does it make the value of crypto more valuable, if that makes any more sense? Does it make it more like, say if the Federal Reserve print like 75% more dollars, does the value of crypto or Link2 or Ripple go up because of it?
I'd say yes. Abuse of a system shines a light on a system that's more difficult to abuse. So I think that even though you'd be diluting the money in the system by creating more, I think it's just highlighting a unique advantage of the space that we're focused on.
I agree with Rich on that too. Like, it's just a simple answer of like, I don't think that the Fed it's a spectrum, right? I'm actually a Keynesian. I believe that central banks should be able to expand monetary policy, But if they are doing things that some people don't like, it should increase the value of the thing that limits that abuse, which is crypto.
All right. Thank you, Hart. Thank you, Rich. It's been fascinating and interesting listening to both of you speak here today, because now it gives us just a basis of a deeper, broader conversation in terms of liquidity, growth. Obviously, we have to start challenging the powerhouses who have got control in the Bitcoin and the mining and the economic factors in that, but I don't think we can get into that today for sure. But I wanted to thank you both for being here today and lending us some of your knowledge and perception on that. Thank you, guys.
Thanks for having us.
Thanks, Karim.